In this dynamic and informative video, you will learn the secrets of trading like a pro and discover 5 powerful strategies that can propel you towards financial success. Whether you're a novice trader looking to elevate your skills or an experienced investor seeking new approaches, this video is your key to unlocking the potential of the markets. Led by a seasoned trader with a proven track record, this video provides you with a treasure trove of knowledge and practical techniques. Each strategy is meticulously explained, giving you a clear understanding of how and when to implement them effectively. From mastering technical analysis and chart patterns to utilizing fundamental analysis and market sentiment, you'll learn how to make informed trading decisions with confidence. Gain insights into identifying potential trade setups, managing risk, and maximizing profits. Discover the art of trend following, breakout trading, and momentum strategies, and learn how to adapt them to various market conditions. Uncover the secrets of successful swing trading and explore options strategies to enhance your trading arsenal. Whether you're a beginner seeking a solid foundation or an experienced trader looking to refine your skills, this video is your ultimate guide to achieving financial success in the trading world. Get ready to unlock the secrets of trading like a pro and pave your way to prosperity. Don't miss out on this transformative opportunity. Watch now and embark on your journey to financial triumph. Strategy 1. Trend following. This strategy involves identifying and riding market trends to maximize profit potential. Traders using this strategy analyze charts and indicators to determine the direction of the prevailing trend. They aim to enter trades in the same direction as the trend and stay in the trade until the trend shows signs of reversal. Popular technical indicators for trend following include moving averages, trend lines, and the average directional index (ADX). By aligning their trades with the dominant market trend, traders aim to capture substantial price movements. Strategy 2. Breakout trading. This strategy focuses on capturing significant price movements that occur when an asset's price breaks out of a well-defined support or resistance level. Traders using this strategy closely monitor key levels on the price chart, looking for consolidation patterns or tight trading ranges. When the price breaks above a resistance level or below a support level with convincing volume and momentum, traders enter positions in the direction of the breakout. This strategy often utilizes tools like trend lines, channels, and volatility indicators such as the average true range, ATR, or Bollinger Bands to identify potential breakout setups. Strategy 3. Swing trading. Swing trading involves capturing shorter-term price swings within a broader market trend. Traders using this strategy typically hold positions for a few days to several weeks, aiming to profit from medium-term price fluctuations. Swing traders rely on technical analysis techniques to identify potential entry and exit points. They look for chart patterns such as double tops/bottoms, head and shoulders, or bullish/bearish engulfing patterns, combined with indicators like oscillators, example, RSI, stochastic, to gauge overbought or oversold conditions. By focusing on shorter time frames and price swings, swing traders aim to achieve consistent profits while minimizing exposure to longer-term market uncertainties. Strategy 4. Fundamental analysis. This strategy involves analyzing fundamental factors that influence the value of an asset. Traders using fundamental analysis assess economic indicators, company financial statements, news events, and other factors to evaluate an asset's intrinsic value. By understanding the broader economic and market environment, traders can make more informed trading decisions. For example, a trader might analyze a company's earnings report to determine its financial health and growth prospects. They may also monitor economic indicators like GDP growth, interest rates, or employment data to assess the overall health of a country's economy. Fundamental analysis is particularly popular in longer-term investments or when trading stocks, commodities, or currencies based on macroeconomic factors. Strategy 5. Risk management. Effective risk management is a critical aspect of any successful trading strategy. It involves implementing techniques to protect capital and minimize losses. Traders using this strategy employ various risk management tools and practices, including setting appropriate stop-loss orders, diversifying their portfolio across different assets, and allocating position sizes based on their risk tolerance. They may also use risk-reward ratios to assess potential trade opportunities and determine if the potential reward justifies the risk. By managing risk effectively, traders can preserve their capital, withstand market fluctuations, and position themselves for long-term success. Remember, mastering these strategies requires practice, discipline, and continuous learning. Traders often refine and adapt these strategies to suit their individual trading styles, preferences, and the specific market conditions they encounter. It's important to backtest and validate strategies before applying them in real-time trading scenarios. Thank you for joining us on this empowering journey towards financial independence. If you found this video helpful, don't forget to like, share, and subscribe to my channel for more valuable content. Remember, your path to financial independence begins now.